Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for making time today.
Happy to be here.
Well, stocks on Wall Street last Friday, July 1st, started this second half of the year with a gain despite all the concerns about the economy. But for the week, all three main indices were down. It seems investors were looking for some bargains last Friday. What's the story in the global markets as we start a new week?
Okay, well, Friday was a surprisingly upbeat day for the stock market. The Dow and S&P rose by 1.1%. NASDAQ rose by 0.9%. But as you stated, it was a negative week overall. And if you look at the first half of the year, this was the worst first half of the year since 1970 when S&P, for example, fell by 21%. Year to date, Dow is down 15%. S&P is down by 20.25%. NASDAQ is down by 29.7%. Though some people do see hope. S&P during 1970, when they had the worst first half of the year, in the second half it did rise by 26.5%. So in 1970, even though they had a very bad first half of the year, they did recover. However, sadly, I don't see that happening this year. The main cause of the decline, inflation, does not seem to have hit its peak, and the Fed is likely to continue its plans to raise interest rate at a quick pace. The latest evidence for that is the personal consumption expenditure price index figures for May, which is what Fed likes to look at. The price index inflation over 12 months was 6.3%. That's the same as April. But if we just look at the month of May, 1 month, it was 0.6%, and it was much higher than where it was in April, which was only 0.2%. We did expect something like this from the consumer price index, but it has been confirmed. So there does not seem to be any sign that inflation is abating. Core PCE inflation for 12 months was 4.7%, and for 1 month it was 0.3%. That's the same as April. Now, even though inflation is high, consumption also seems to be high as well. Personal consumption expenditure was up 0.2% in May, though in real purchasing power terms, it did fall by 0.4%. Income in nominal terms, in monetary terms, it rose by 0.5%, but in real terms, it fell by 0.1%. So perhaps the Fed's move to raise interest rates is starting to have some effect, but we'll have to see whether it actually sticks or not. In Europe, they had worst quarter since the onset of the pandemic. Eurozone inflation for June was 8.6% over the last 12 months. Inflation is accelerating there, and now perhaps it's higher than the U.S. Because they're much closer to Russia and Ukraine, and they've been hit directly by the fallen exports and sanctions against Russia. Now, in Asia, there are some signs that China is beginning to recover. Purchasing Managers Index shows orders are starting to revive. But Japan's survey of manufacturers show that Japanese firms are still pessimistic. The results for today are mixed. Nikkei and Shanghai is up. Hang Seng is down.
Well, Korean stocks started out higher today, perhaps with a boost from the U.S., but we're quickly into negative territory. Some of the bigger names were a mix. Samsung and SK hynix gaining back a little ground. Among the worst hit were construction shares. Tell us about the domestic market.
Okay, well, today Korea really did not share in the U.S. market's uprise. It's mostly because of high inflation and weakening won, but also another new factor here is the trade deficit. For the first half of the year, Korea scored a $10.3 billion deficit, and in just June alone, it had $2.5 billion deficit. The value of exports and imports both rose. In fact, in terms of the month of June, the exports, Korea had the best month ever, but obviously imports rose much faster than exports, so we had a trade deficit. But what's perhaps even more interesting is that if you look at the volume of exports and imports, it actually fell. Volume of exports fell by 6.1%. Volume of imports fell by 5.8%. That may mean that the Korean economy is slowing down. It may mean that the signs of a trade engine for Korea is faltering. Korea did have a negative growth of volume in April as well, but it rose in May, but now it's falling again in June. So we'll have to see whether Korea's engine of growth, which had been trade, is running out of steam. Today, Kospi was down 0.22%. It ended today at 2,300.31. Institutions bought, individuals and foreigners sold. Kosdaq was down 0.92%. It ended today at 722.80. Individuals bought, institutions and foreigners sold.
Well, this week, Professor, we'll be getting data on the economy from the Bank of Korea related to expenditures by households, companies, and the government. Also inflation data and the Korea Development Institute with its July report. What's on your radar in the week ahead?
Okay, well, the big one is, as you mentioned, the June Consumer Price Index and inflation figures. Will it be higher than May's 5.4%? Will it pass 6%? That's the big question right now. Another fairly big question is from the KDI projection. In the last projection, KDI projected that this year's growth would be 2.8%. That was similar to IMF and government projections, but will it change? Will it fall? Now, for international statistics, we have an OPEC meeting on Tuesday. We were hoping that OPEC will raise supplies, but it doesn't seem likely. There are some questions on whether OPEC is holding supply because it wants to maintain high prices, or whether because OPEC has reached its output capacity, but we'll have to see what the OPEC does. On Wednesday, U.S. Fed is releasing their FOMC minutes, and then they're also releasing U.S. JOLT, JOLT report, job openings and labor turnovers, so we can see how strong the U.S. economy is. And on related to that, on Friday, U.S. is releasing their unemployment numbers. We want the numbers to be healthy, but not as high as previous months, because we want the U.S. economy to slow down if we want the global inflation to slow down.
Right. Well, Professor, we'll check in with you again on all of that later in the week. Thanks so much for coming on today. Appreciate your insights.
Thank you.